Hi, everyone. Happy Wednesday. So today we're going to continue down this trend that we've had over the last couple of weeks where we're talking about some actually current cases that both Jane and I are working on, some things that we're talking about throughout the day and over the course of the week. And so these topics are really coming very naturally because these are matters that we're both working on presently. A lot of them we're both assisting this either the same client or at least they're very similar. And so we see these trends happening and that encourages a lot of these topics. So we're continuing in much the same trend that we've had over the last few weeks. And what we've seen and what we've been talking about this week has to do with just some due diligence. On my end, that's been clients who have purchased businesses without investing the time and money into due diligence. And we've had some of our clients come in after purchasing a business and they did not do a lien search. And typically those are just a couple of $100 to do a lien search that would tell you in every county if there's any judgments or tax liens. And they did not run that. So of course, we've been dealing with some situations where judgments pop up. Some liens have been popping up. Some UCC filings have come up and something that we're dealing with, but also some potential claims have been coming up as well from a lack of due diligence period, from looking at potential exposure on employment records. And I know employment is something that we talk about all the time, and employment is something that always worries me because it carries that level of personal liability to it as well for the owners. And so if you come into a business and you continue much the same way of managing employees, you essentially take on that successor liability and you step into the shoes of the last owner. Even if you eventually clean things up, or even if you clean things up right away, if you don't know about it, you may not be able to contract around it. And one of the ways in which we try to contract around certain liability is with various indemnification clauses where the old owners will cover the new owners for certain liability. So of course the new owners would still be brought into the lawsuit, but they would have that veil of coverage from the prior owners. But if we don't know about this, there's very specific language that we would need to use. And if this is something that you don't know about, really the buyers are putting themselves at a disadvantage. It's always this balancing between, well, what if I ultimately don't end up buying the business and I invest all this money into this due diligence? We hire forensic accountants, we hire attorneys, we're looking through all this paperwork. It's in my opinion, it's one of the most worthwhile expenses in obtaining the business. It's right up there with making sure that you have structured the business properly, that you're in the best tax status and advantage for the business and future. But just knowing what it is that you're actually buying is so important. It is an investment. It is certainly something to carve out fees and funds for and to be prepared for when you're going to be purchasing a business. So what we're dealing with currently, and from an actual example of what we have in the firm, is we have a client that purchased a business. Not only is there employment liability that we've identified, but at the time when he was buying the business, a number of years ago, he chose to look through documents himself and did not have any help, no accountant help, no bookkeeper help. There was no outside consultant help and no attorney help. Just absolutely went forward on his own and reviewed everything. And so now that we've been retained, reviewed, and can identify a lot of employment liability. Now, none of that has come to light, at least for now. But the biggest problem has been that the prior owners failed to pay any sales tax at all the years that they were in business. And so since he purchased the company, that liability has now transferred over because he owns the company. The liability remains the same, and the state, frankly, doesn't care who the new owners are. They just want that amount to be paid. And there also was no carve out in the contract. And so we're leafing through this contract looking for any protection. But in a situation like this, it's so easy beforehand just to make a carve out. Well, first of all, to look for it and to require it be due at closing. But also, if you didn't do that, just to include that blanket statement that in case there are any tax liabilities that are not yet calculated, but will show up because you now know of this liability, you could put in this clause that the old owner will cover you for it. And that is something that would then be that defense. So in my opinion, it's part of the investment of a business. You add that expense of that due diligence into the acquisition cost. And I think that's one of those expenses you just can't go around. It's just far too critical, in my opinion. But Jane, again, I know that we've been talking about this so much over the last couple of weeks. Just wanted to see and give you a chance to also talk a little bit about what you've seen on your end of this as well.
Thank you. Yeah, everything you've mentioned are completely, valid points, and it's really, really important to spend the funds on that. But I've actually gotten two different clients in the past couple of weeks, and I was astonished at the lack of records that I got. So one of the clients they didn't have any bookkeeping done for 4 years. And the sales tax was also not ever, they didn't even think about it. So not sure if they had an accountant then. I'm pretty sure they didn't. But the records that we got, none of it was organized, so they didn't even have any electronic records, but they did send everything in shoeboxes and different boxes and sort of organizational. And so it wasn't organized by project, so years, so all of that had to be created. So it took us some time to even create that sort of electronic record, right? So we use SharePoint, but any sort of like Dropbox, that could be like a valid record. So if there's an audit or if there is something else, or you need to, let's say, further than sell the business, at this point, you at least have the records that could be provided to everybody who needs to review. So we created that, and keep in mind that a lot of the banks don't have bank statements available online to a certain extent of years going back. So some of them have to be requested. The bank could be taking quite a while to find the statements. The bank might also tell you that they can't provide this. You need to come in person. So we've had different situations with two clients that had to actually find the records, and it was taking months before the bank was able to provide something. And I believe for one of the statements for one of the bank accounts, it was never recovered. The bank, I'm not sure really what truly happened there, because the client might actually not even remember which bank had the records at, which I know it sounds like almost impossible to believe, but it's real. People do forget that, because if you're talking about 6 years ago, you might not remember, or things changed, or the representative you worked with, they might not be able to pull up your records. And some people don't even remember the business name that this was under. It's some of the things that come up are just truly something that is hard to believe, but it does happen. So it's really important to have all this. If you have the bank statements, just save them. You could always refer back to it. It will only take a little bit of your time now, but imagine trying to find it years down the line. I think that's what's crucial. And in the situations that you found, like the due diligence, I know hiring professionals, it's pretty expensive, but imagine not knowing something like this in the future. I think it's definitely important to do that now.
Absolutely, for sure.
Thanks. And if you have any further questions on due diligence or any of the records or anything like that, would be happy to help.
Thanks,
Thanks.
everyone.